Hey guys, so I wanted to give you an update on my Vanguard 0 to 100k series and let you know how things have been going. For those of you who have been following this series, you might be aware that I haven't actually released an update in some time. The reason for that being that I've actually hit quite a big roadblock, which I'm going to talk about today and discuss the whole situation. For those of you who haven't seen this series before, essentially I take all of the income I'm able to generate from YouTube and invest it into a portfolio. I've invested all of this inside a pension account or a SIP here in the UK. I'll discuss that in more detail later on, but essentially the reason is because I get a 25% bonus or a 20% bonus depending on how you look at it towards that total goal, which of course accelerates the portfolio at the moment, but I will pay tax on the way back out. I'll be delving more into the difference between ISAs and SIPs in the future, so do stay tuned for those. So we're now on our 6th episode, and episode number 5 I was actually up to £54,000, which was fantastic. And as you might have seen from the thumbnail, we haven't made a massive amount of progress in the last 6 months. So let's talk about what's been going on. I'll show you how much I've earned and then we'll discuss the huge barrier that I'm facing. So my income is broken down into 5 sections. The first is YouTube ads. The second was match betting, which I'm actually getting rid of, which I'll discuss in a moment. The third was affiliates, the fourth sponsorships, and the last one is Patreon. So here's what I've earned over the past 6 months in each of those. Now YouTube ads is the money I get when somebody watches a video and an advert pops up. This can vary depending on the type of video I make. So for example, some on how to invest make a lot more money than kind of a portfolio update. So this can vary massively depending on the kind of content that I upload. In December we started off strong at £609. January fell slightly to £419. The reason for that just being that I didn't upload as many videos that month. February was really good at £777, March was £638, April £639, and May £624. It's nice to actually see those figures are up versus the previous year. They haven't taken a monumental jump, but they are slightly up, which is nice to see. The problem being with this kind of content is because I'm so stuck on the UK niche, which is a good thing for you guys, it means I'm not able to get the massive amount of traffic that a US channel would get. Someone, for example, like Mark Tilbury, who's been able to reach a US audience with his content because he focuses more on dollars and doesn't mention specific things like an ISA, has been able to hit a wide audience, and I can imagine the money he's making is a lot different to the money I'm making. The way for me to get more money that way would be ideally not to mention UK content so much and go more US, but I don't feel that really serves the audience quite as well. So I'm trying to focus more on the UK, so my YouTube ad revenue is never going to be that great. Next up, we've got match betting, and for the last 6 months, I have made no money match betting. When I started this series, I did a video on a week where I made £536 and I averaged £50 an hour tax-free, which was amazing, but since then, to be honest, I just haven't had the time to do it. But personally, while trying to run a YouTube channel and trying to do all of these extra things that I still need to get around to, it just doesn't kind of fit the bill. So for now on, I'm going to keep it out of this series. Next up is affiliates. So this is the money I get when somebody signs up for a link in the description. Some of these vary, some are very small, some are a bit better, but this really is the bulk that allows me to make this channel work. So a big thank you to anyone who's used one of my links because it does make a huge difference. Without them, I'm not sure I would be able to run the channel as easily. So in December, this was my lowest since March, which was £557. January, this bumped massively because of course, the start of the new year, more people want to invest. That was £1,441, and same in February, it picked back up, £1,460. March dipped slightly to £1,363, and in April it was £2,000, a nice big jump. And then in May, I had a £3,000 month. Of course, it is in season, so the beginning of the year is good, and also around the ISA season when people are signing up for new accounts. So overall, I'm really pleased with that one. Of course, if I can keep increasing it, the more money I'll be able to put into this series. Now, next up is sponsors. This is people who will sponsor a section of the video, so maybe a 30 to 60-second section, or sometimes I actually make content for them on their own channels, which is probably something I need to branch more into. I've also started doing some TikToks. Yes, I'm not dancing, but I have started doing some videos on there which will actually allow me to sell more sponsorships in an easier way. The thing I actually really like about TikTok is it's easier that I can just kind of talk to my phone, upload it, done, so I can answer questions really easily in a video format. That's something I want to experiment more with right here too, so if you see me answering some questions in short videos, Let me know what you think, because I might do some more of those, because I think it's really personal and I really like that kind of approach. As much as I love this, it takes so much thought to write a script, record a video, to edit it. It's such a long process, so we'll see what happens with that. But anyway, that has been quite interesting. So December was really good, 1,125. January dipped massively to £250. February 750, March 750, April 1,750, which was my biggest month ever, and May then dropped back to 250. Now, this does vary massively and depends when I can get things in place. In an ideal world, I would really like to add a different kind of revenue stream so I didn't have to rely as much on sponsorships. Don't get me wrong, I'm really grateful for anyone who wants to sponsor a video, but sometimes it's so much work. By the time I have 3 or 4 initial calls sometimes with them, then I write a script, I have to send it over, get it approved, they send it back, I then have to record the video, edit the video, make any changes, and then it can go back and forth multiple times before I'm even able to publish a video. And when you want to release one a week, sometimes it gets quite frustrating because you almost need to do regular videos and then have these advertising slots running on the back of it. So it's very time consuming, but again, it does help with the income. And last but not least is my lovely little Patreon. So my Patreon's been doing pretty well. December was 208, January 188, February picked up a little bit to 196, March 188, April dipped quite a lot to 146, and May 150. Now I have to admit I did shoot myself in the foot a little bit here in that I didn't upload enough updates as much as I wanted to. Now I'm actually posting every single week in there, it seems to be doing a lot better. But I'm also aware the cost of living is creeping up and the first thing everyone's going to cancel is any kind of subscription. So I'm super grateful for anyone who signed up for that. It makes the whole thing so much easier to run and more manageable, and I've got so much more content coming from that. That does at the moment allow people to see my regular portfolio updates as well as be part of a Discord. But most of all, I think what's good about it is I'm able to answer any questions you guys might have because I get so many questions, I just literally can't keep on top of them all. So if you need to ask me something, do consider joining that. It's literally only a £5 at the moment. So in terms of my totals, here is how I've done. December was 2,500, January 2,299, February 3,184, March was 2,940, April jumped massively, again because of mostly the signups, was 4,595, and in May it was £4,059. Now I do really need to add another revenue stream there, which is something I'm going to be working on shortly. But again, it's just about streamlining the process, so I've actually got time to work on things that I really want to work on, such as courses, downloadables, and all that kind of fun stuff. I've also thought about consulting, which is a little bit of a grey area, but I know so many people have asked me if I could jump on a call and give them some one-on-one advice. So we'll see how things look in the next update. Maybe I'll even have a new revenue stream to add to this. So this actually works out to be a total of £65,228 earned in total from YouTube, which is pretty amazing. I've been doing it now for 28 months, so again, it's not as amazing when you think of it like that, but still pretty damn good. I've averaged £2,329 per month. Bear in mind, for the first few months, I was earning nothing as well. And hourly, that works out at £58.24. Now, of course, I always say that if I actually put into kind of account the time I spend thinking about YouTube, as well as actually doing it, you could at least half that number. It takes up so much mental capacity to be thinking about the different ideas, what you want to do, replying to comments, and all those kinds of things that you just don't see in this. The reason I think it's so good is it actually shows you realistically what kind of a side hustle can really turn into. So let's take a look at the portfolio and I'll tell you about the problem that I'm facing. So here's a portfolio. The total value is £57,256. And you can see I've had a total gain of £1,015. If we take a look in more detail at my investments, you can see here is how it's broken down. So I've got my FTSE fund, which is 10% of my portfolio. In there, I've currently got roughly nearly £6,000, and I'm actually down £137. I've then got my FTSE Developed World Fund, which is the developed countries, and that's 40% of my portfolio with £23,000 in, and that is up £37. And then finally, I've also got an S&P 500 fund, which is 14% of my portfolio, £8,000, and that's up £91. And I've also still got 34% of my portfolio as cash, which is nearly, again, £20,000. Now these numbers are a bit skewed. If we take a look at my performance, you can actually see I've contributed £56,241 and my investments returned to me £1,015. So my rate of return has been 2.45%, which is not massive, but the market has also not been that good over the past couple of years. If we actually go into calculations, you can see just how it's broken down. The interest I've got on my account has actually, because the rates are so good, has been £595.12. And I've actually had £485 in dividends. My charges have been £56, so the total is coming from there. So my investments have actually not made much money, but the dividends and the interest on my cash balance have really saved me. Unfortunately, the Bank of England rate has gone up, but Vanguard has decided to cap the amount of interest they are paying so they can kind of recoup and make some profit. Arguably, if I didn't have my money in here, then I would be making more in a normal cash ISA, but I am getting that bonus. If we look month by month, we can see down here since the bottom in December how I've done month by month. So some months have been minus 500, some have been up 900, and you can just see the big swings that I've had in price. But eventually we've had a couple of positive months and then it has come up. The cumulative returns have helped, so that's things like the dividends coming out and the cash interest, which is kind of carrying the portfolio a bit at the moment, I have to admit, but you can still see some nice green numbers in there. And if we look at the individual investments, you can see how much I've made from each. So we've got the cash balance, which has made 6.11% with a total of 595. The FTSE Developed World has made really 0.39, but with a dividend, it's 1.92%. So that's made 180 roughly. The UK one has actually done minus 2.39%, but the dividends have saved it. Again, the UK's got a lot of good dividend paying companies. So it's ended up at 1.97% with £110 in total. And then lastly, we've got the S&P 500 at 1.34%. With the dividend, it's 2.76 at £187. So the dividends actually do make quite a big difference to the portfolio. And if we look at the insights, I've got 65% in equities, 35% in cash. You can see I'm 42% in North America, a little bit in the United Kingdom, but I've still got 35% here in cash, which I do eventually want to get rid of. And there at the end, you can see over the last 3 months, my breakdown of returns, which was 2.17%. And I have been continuing to buy into the portfolio. My last one was the 11th of May, so I'm due to put some more money in, but I wanted to record this one first. I did actually at one point put 10,000 in because I just wanted to get a big chunk of that cash invested into the system. I think I do now want to make some progress in getting this cash invested because it's so important to just get it into the market. So at this point, there's a good chance you're probably thinking, well, how have you only gone from 54,000 to 57,000 when you've earned all of that money? Well, let me explain. So my problem is a lovely thing called tax. Now I have to admit, I've just been so eager to get money into this series and keep adding and building that I probably haven't really saved enough money for tax. But that's not too bad because I can absorb the cost from my other business, but I don't think that's really how I should be doing this portfolio. And I have to admit, tax is ridiculously more complicated than it needs to be. So in simple terms, you get 20% tax relief on the money you put in, or if you're a higher rate payer, you get 40% tax relief. So in a simple world, that would mean that you didn't pay tax because you save it. But unfortunately, it doesn't work like that. So let me try and explain how this works, especially in the higher tier, because it's actually a bit ridiculous. So the simple way to explain it is a little bit like this. So if we take a look at how much you pay into your pension. So let's say you're trying to get £10,000 into your pension. Now, if you're in the basic tax rate, now we're going to ignore the personal allowance here, just park that to one side. So any income you earn within the basic tax rate, if you put £8,000 in, the government will add £2,000, which is actually a 25% gain, or if you look at the total, which is 10,000, you save 20%. I don't know why it's worded like that, but it's a bit of a backwards way to look at it for me. Then in the higher rate, we do the same. So you pay the £8,000 in and you get the £2,000 just the same. So that is where the 20% saving comes from. Easy, right? Now, when you get into the higher tax bracket, it's 40%, which sounds great, but it's not actually as simple as it looks. So this is what actually happens. So if we take a look at the tax bracket rates, so your basic rate is up to £50,270 at 20%. And then the higher rate is up to 125,000. Okay, so that's pretty simple. So if we take that 50,270, and then we say that's obviously at the basic 20%. So let's say we earned another £10,000 to keep it simple, which would be 60,270. So then we've got £10,000. Now what would happen normally when you went into that £10,000 is you would pay 40% tax because you're in that higher rate of tax. What actually happens instead is you pay 20% of tax. So that is where you're able to save that additional 20%. But it actually makes it quite a complicated sum. So essentially, I think the way they should be wording it is if you go over that basic rate and you put it into a pension, it essentially extends that basic tax rate right up to maybe £125,000. So instead of paying 40%, you pay 20%. Which is all a bit backwards to me and a bit more complicated to work out. Now on top of that, I also need to pay national insurance, which could be up to 9.73%. So it's safe to say I need to pay quite a bit of tax.
I'm so excited.
So we take a look at that initial breakdown. From September to March was my first tax year because I didn't earn before that. My next tax year was April to March, which I've got highlighted here, and now I'm into tax year 3. So from December to May, I've actually earned £19,582, which sounds amazing, and if I could put that straight into my portfolio, it would boost it massively, which I would love to do. So this is a situation I'm currently in. So in year 1, I actually did pay this tax out of my own pocket, which I think is fine, but I also think for the sake of clarity and tidiness, it would be best to have it all within this one portfolio, which pays out of itself. Here's where I'm currently at. So year 1, my income was £12,992.89 within that tax year, of course. My income tax that I'm due to pay on that is £2,598. And I also need to pay the national insurance at 9.73%, which is £1,264. Now in year 2, this gets a little bit scary. So in year 2, I was actually able to earn £43,578. My income tax was £8,715, and my national insurance was also £4,240. So the total tax I get to pay is £11,314, and national insurance of £5,504. So the total tax I need to pay is £16,818. Now, of course, I realise that I'm in quite a fortunate position that I actually get to pay that tax, but it at the same time doesn't feel great. So the total earning of £19,382.29, if I save that for my tax bill, which really seems like the sensible option, that leaves me with £2,763. Now, if I also minus 30%, which keeps the tax money back for the next tax year, that leaves me with £1,934 to invest. Now this actually leaves me in a bit of a weird situation because I really wanted to accelerate the series, but I also think it does make sense to take a step back, make sure I get the tax situation sorted out, and then going forward, I can just take the income minus 30% and just invest the rest. That way I've actually got the money when the tax bill comes. I did think about whether I should just absorb the tax, or essentially what I could do is get my business to pay the expensive part, which is in the higher rate, and then this could be taxed at less, so I could accelerate it further. I'm not completely sure how I feel about the whole situation, and I will maybe put a poll up to see what you guys think, but I do think it could be pretty tidy to do it this way. I've also thought, because this year the pension contributions have actually raised to £60,000. So this year, if I'm able to contribute £48,000, that takes you up to the £60,000 in a pension. That would smash through the series goal, as I would really love to get to £100,000. I'm also contemplating whether it would make more sense this year to put money into my pension account rather than my ISA, just to give it that boost while that allowance is there, because I am really a little bit behind on a pension for my current age. But the dilemma I kind of have with that, which is a bit of a weird one, is I do want to keep all of my YouTube income invested in this portfolio, because I just think it's so cool to say I built up a 100k portfolio just from doing YouTube, which kind of is my goal. I don't know where I'm going to go beyond that. If I'm going to go for 1 million, I would love to, but I'm aware that it's going to take maybe 40 years unless I'm able to find a way to make much more money. I did think about opening a second pension otherwise, but I think that gets a little bit messy, so I'm not fully sure, but I'm going to ask you guys what you think, so do leave a comment and I will put up a poll and kind of gauge what you guys think. It's quite difficult because sometimes I end up doing things for YouTube rather than just doing what's probably best for me. So I actually ran some sums on this, so I was trying to think how much I actually need to earn to actually get to my target. So it's actually quite scary. So I actually need to earn £119,047. So I can pay the tax, and then I would get £83,333. And then when I put that into a pension, it will be boosted up to 100,000. I think what's interesting with this though is if I do it this way, it actually gives an accurate representation of what the whole process is like. And I think it is pretty crazy to see how hard it is to hit 100k, especially if you're doing things properly. And just imagine if this wasn't kind of a side hustle, I didn't have my main income, I would still have to use this money to pay all of my bills first before I actually invested it. I think I'm quite lucky that I'm able to do this, but at the same time, I also don't spend very much money at all. I just save, and I kind of want to hit that 100k, so then I can try and find a little bit more balance about how much I invest and how much I spend to enjoy my life. There's so many more things I want to do as well as investing, but I have to somehow find that balance between the two. And I think what's also really interesting is it just shows how far-fetched all of these kind of get-rich-quick schemes are, how you can make 100k, a million, 10 million a month, whatever it might be. It's actually far more harder, and I've earned basically an average wage over the past couple of years, maybe even below the average wage at the moment, but it still adds up. I did think really I would love to absorb the cost and accelerate this series for you guys, but I think you would all probably prefer it to be more transparent and legit. So we'll do it that way. I don't want to skew the numbers, and yeah, I'd love to see what you guys think. So hopefully from this point on, I'll be able to now steadily just increase the amount every single month. I'll do another update in a couple of months and let you know how I'm kind of getting on. I'm aware that I don't want to make tons of episodes about this because I think I want to keep it more interesting. So maybe in 3 months, I'll update you guys how things have been going and just see what point we're at then. So thank you guys again for your support. Honestly, without you guys, this just wouldn't be possible. Do subscribe to follow along because I really want to see how this portfolio goes, even if you check back in 3 years and think, oh, how did that guy do? Because I'm going to keep doing it, even if I just keep making these updates. And I want to track the whole process, probably right up to 1 million across my portfolio. That is my end goal, of course. So yeah, let's keep tracking transparently, and I will see you guys in the next episode. Thanks.